morning. Welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, the 15th of January, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, you could phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEXTV. Today's birthdays: on this day in history, in 1929, Dr. Martin Luther King was born. His three-day holiday weekend celebrating his birthday will be this coming weekend in the United States. One programming note: we had announced yesterday an interview today with Tom Hutton. That interview now will be pushed back approximately 2 weeks. We hope to get that in by the end of January. We also have an interview at about that time, or very early February, with Sue Langley of Lloyd's to talk about the exchange arrangement recently signed or recently negotiated with IBM in London. So we'll keep you abreast well in advance as to when those dates come up. If you wish to be notified by email, send us an email and we'll add you to our mailing list. Now to our main news. It's the economy today. The stock market's down about 125 points right now. And the Realty Track company that monitors foreclosures said that U.S. foreclosure filings in 2008 rose 81% from 2007. A total of nearly 3.16 million foreclosure filings were reported in 2008. The consultant said that 1.84% of all American housing units, or about 1 out of every 54, received at least one foreclosure filing during the year. In December, the foreclosure filings were reported on more than 303,000 American properties. That's up 17% from November. In the fourth quarter, foreclosure activity rose 40% from the year earlier. J.P. Morgan Chase is the second largest U.S. bank by assets. They came in as the first of the banks with some quarterly earnings numbers. They said the profit fell 76%. As rising defaults and the recession forced the bank to write down almost $3 billion of assets. However, fourth quarter net income was $702 million a share. $702 million or 7 cents a share. Let's make sure we say that again. Net income for the fourth quarter was $702 million. That includes a $1.3 billion gain from closing a joint venture, the company said. Without the gains, the company would have lost 28 cents a share. Fourth quarter write-downs for mortgage-related assets and leveraged loans totaled about $2.9 billion before taxes. The bank's investment banking division lost $2.36 billion in the fourth quarter, compared with a profit of $124 million the year earlier. The bank's credit card unit had a loss of $371 million for the quarter, compared with a profit of $609 million a year earlier. 14 analysts surveyed by Bloomberg News had an average earnings estimate of 1 cent a share. The bank came in at 7 cents a share. So the banks are going to begin to report now, and there's cautious hope for the financial sector, even though today Bank of America announced that they were going back to the federal government to try to get more money from the federal government's TARP program to help offset losses that they think they're going to sustain with Merrill Lynch. You may recall that the federal government essentially required Bank of America to purchase Merrill Lynch. The bank agreed to do so, but apparently they feel that the price they paid was too high. In some reinsurance news, Guy Carpenter, the reinsurance broking arm of Marsh Mac, said that Sal Zaffino has stepped down as chairman and CEO of its reinsurance solutions business. Zaffino will be replaced by Charlie Hyam. Hyam was formerly Carpenter's global head of client support services. Hyam, in turn, will be replaced by former UK CSS head John Canavan. Sal's son, Peter Zaffino, who is currently Carpenter's CEO and president, said, "While Sal's day-to-day counsel will be missed, I'm confident that Charlie's leadership and management skills will be invaluable to provide the highest caliber of services to our clients." Charlie Fry, who was the chief operating officer of Carpenter, commenting about Mr. Canavan, said that in his 20 years with the company he has developed strong relationships and he has an extensive knowledge in all areas of client support. So some changes at Carpenter. Germany's Allianz will be able to retain its interest in the Hartford Financial Services Group when the Hartford becomes a savings and loan company. The U.S. Federal Reserve announced this yesterday. Allianz owns almost 24% of Hartford's voting shares. You may remember that Hartford applied to become an S&L in November on the date of the original deadline for banks to apply to the TARP for the $700 billion program. In applying to become an S&L, the Hartford announced plans to acquire the Florida-based Federal Trust Corporation for only $10 million. Allianz said that it has no plans to exercise a controlling influence over the Hartford. Allianz has total consolidated assets of about $1.4 trillion. The Hartford has total consolidated assets of $312 billion, and Allianz owns 24%. More Hurricane Ike fallout. This time it's Platinum. Platinum Underwriting Holdings has become the latest reinsurer to increase loss estimates from Ike as the true impact of the September storm continues to grow. The Bermuda company raised its loss estimate by around $60 million. It's now up to $165 million net of reinsurance premiums. It said clients had presented additional information reflecting larger losses than their initial estimates. The reinsurer said that about 57% of the increase was due primarily from offshore marine risk, excess of loss, and property cat business. Interestingly, Platinum said that it expects to book a Q4 '08 gain of about $33 million on its investment portfolio. Good for them. We should try to find out where they're investing. Hanover Re has transferred a portion of life and annuity reinsurance to the international capital markets. The transaction, called something such as L7, encompasses a financing value of about 100 million euros and covers unit-linked life and annuity business of several European clients. The transfer enables Hanover to convert a future earnings stream into a current liquidity position, as well as monetizing an embedded value of £100 million as of the end of the year '08. Aon has come out with a report concerning Mr. Madoff. Aon issued a report yesterday in which it forecast direct insured losses resulting from Madoff's Ponzi scheme. They said it could be as high as $1.8 billion. According to the report, quote, while the maximum potential exposed insurance limits are estimated to be over $6 billion, the range of direct insured losses will be much smaller, somewhere around $760 million and $3.8 billion, with a best estimate of $1.8 billion. According to the report, the high end of the likely range of insured losses represents less than 20 loss ratio points on global D&O, E&O insurance and fidelity premiums. However, since most of the claims will be concentrated in the financial institution sector, the loss ratio within that specific sector may be significant. According to the report, based on the estimated financial institution insurance premiums, that loss ratio impact could be anywhere from 40 to 180 loss ratio points. According to the report, when the effects of this scandal is combined with the impact of the ongoing credit crisis, many insurers will see profitability deteriorate even further in their financial institution's book of business. That report is available if you go to the Aon Benfield website. Now we'll go to a word from our sponsors and come back with the rest of the news.
From prehistoric time to today, man's progress has been marked by his ability to fashion tools and use them to his advantage. From early humans making tools from stone, man evolved and was soon trading with other men. Money evolved,